makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Tensions grow after the killing of an Egyptian soldier in a clash with Israeli troops at a Gaza border crossing. We'll bring you the latest from the Middle East. The Ukrainian President Volodymyr Zelenskiy continues his European visit after securing $1.1 billion in military supplies from Spain. Meanwhile, members of the Swiss government are reportedly considering inviting Russia to a June summit calling for a peace deal. Plus, our live interview with the South African finance minister ahead of the country's national election on Wednesday. Now, first thing is first, we also have good conversations, of course, on stocks and markets in general. We heard from Neel Kashkari about what he thinks the Fed should and will do. Mr. Neel Kashkari saying that the Fed has no reason to hurry with cutting rates. Now, stocks in general edging higher, markets reopening in Europe and the U.S. with traders looking to inflation prints, but also central bank speakers for hints on the timing of interest rate cuts. Now, you can see a little bit of a mishmash across the board. Let's also look at U.S. futures. This is important simply because yesterday we were closed, so anything that happened over the weekend would be priced into today. You can see S&P futures gaining 0.2%, and of course the NASDAQ finishing at a record high on Friday, 18,927. So South Africa is enjoying a rare streak of uninterrupted electricity right before tomorrow's general election. Now, the ruling ANC has been successful in keeping the lights on for more than 50 days. But this is drawing more suspicion than praise. Well, Bloomberg's Jennifer Zabazaja reports from Cape Town.
South Africans have been used to this. Dinner by candlelight, pulling up to traffic lights that go dark. All due to frequent electricity cuts that have disrupted lives, impacting economic growth and prompting criticism from mining companies to retailers. Just last year, the power utility company Eskom could only keep the lights on for the equivalent of 82 days. But with an election on the horizon, South Africans have been enjoying a rare streak of uninterrupted electricity supply. Opposition parties have used the power crisis as fodder in the run-up to the poll, and now voters have become suspicious as to what lies behind the sudden recovery. Nearly two-thirds of South Africans said they'd consider not voting for the ruling ANC because of power cuts. Perhaps it's no surprise then that the government is trumpeting this winning streak. But the improvements have come at an environmental cost. The state has quadrupled the amount it spends on diesel to run emergency power generators. Still, though, the government insists the improvements are due to an increase in green power, including solar, through a public-private partnership. What they haven't said, though, is for how long the lights will stay on after the election.
Well, staying on South Africa, let's get to Bloomberg's Jennifer Zabazaja in Cape Town, who also has an important guest with her. Hi, Jen.
That's right, Fran. We are just a day away from the election, and as you did mention, I am standing by with an important guest. I have Enoch Godongwana here. He is the Minister of Finance here in South Africa. Really great to have him here, especially considering a number of the issues we were just talking about in that package, Minister. Let's start here. In your budget speech in February, you did say that the ANC would retain its majority for these elections. Do you still believe that 24 hours out?
We are going to have more than 50% outcome of these elections. I'm quite confident.
Why are you confident about that?
It's because of the work we've been doing. I know there have been a number of polls which suggest that we may go below the 50% mark. I must say my own view is that they're largely ideological driven, first and foremost. Secondly, people are basing their results and their surveys on the basis of the outcome of the local government elections.
But Minister, they're also taking a look at the economy. Since the ANC has been in power, growth has stalled, there's more people unemployed. So why then...
No, that's inaccurate.
Oh, okay, then tell me what the outcome of, or what the economy looks like right now.
This notion of saying since ANC has been in power, there's been no growth. The greatest growth records for 40 years ever recorded in South Africa was during Thabo Mbeki's time, when the economy grew almost, on average, about 4%. So it's incorrect to say during our ANC's term there's never been growth.
What about the past 5 years, though?
Okay, I'm going to come back. There's been a number of challenges over the past 5 years. First, there's been COVID. which did a lot of damage to the economy. And secondly, there have been a number of other challenges, including disasters and so on. And again, there's been a perennial problem of electricity and logistics. That I accept.
Then, I mean, we've seen electricity improve over the past few months, few weeks. People are skeptical, as we talked about in our package. Is it actually sustainable?
Let me just give you an example. I met the Minister of Public Enterprise, and I said, I don't believe their story. I then employed a group of engineers from Germany. I'm telling you that's why I believe the story. What they then said, what you guys do, you must take a knock, have massive load shedding, and also massive planned maintenance. And that planned maintenance is beginning to give us dividends and an improvement in the in the performance of this power station.
Does that mean then you revise your forecast for economic growth in 2024?
We may, not now. Our teams are beginning to make a forecast which will table in October during the medium-term budget policy statement.
But at this point, then, you're saying it still maintains the economic growth projections that you had?
We still maintain the economic projections of, on average, of 1.6 over the next, over the medium term. But in October, we'll be tabling a revised outlook.
Minister, if the ANC does not get above that 50% that you're talking about, there's talk of coalitions. Have you thought, though, about what the best coalition partner would potentially be for the ANC?
For now, the ANC is working on the assumptions that we're going to have 50 plus 1.
But I imagine you have to come up with scenarios.
We'll cross that bridge then. Let me tell you, for us, what these elections are about stability and chaos. And the ANC provide that stability, which we've done over the years. Anything else which will replace the ANC will be an assembly of a number of not one or two parties, but a conglomeration of parties, which will be chaotic, as we've seen in municipalities. That's a chaos. So for us, South Africans have got to choose between stability and chaos.
Would there be a medium, though, that is not full chaos, as what you're describing?
We will cross that bridge.
The election's tomorrow.
No, let me just say, we are working, if anything comes about, say on the 3rd, the IEC has promised to certify the results by the 3rd. We will cross that bridge when we get there, but whatever we do will be based on stability.
Stability. And is there a basis for stability in particular that you're focused on today going into May 29th?
After May the 29th, whatever the outcome, the ANC will focus on what will be in the best interest of the country, in particular the stability of the country.
Let's talk about something the president recently did, which was pass the NHI bill. Many people are looking at the economy stalling and asking, where is the money going to come from for a bill like this? I mean, how do you grow an economy and pay for social welfare in this situation?
Let me just say, there's more really rhetoric than facts on the NHI. Okay? On the NHI. What is happening is that we've had our meeting with our health colleagues. At the moment, over the next 1 or 2 years, we'll be focusing on 2 aspects. What are those 2 aspects? The first one is institution building, is building the institution, which is National Health Insurance. What are the elements of that? We've got to set a company registered in terms of the PFMA and populate it. And the second part of it, we're beginning to pilot in 9 provinces, 9 regions, where we begin to say, how do we purchase services from service providers, both public and private? That's a pilot we'll be doing over the next 2 years.
But that costs money.
No, it's within the budget. That's why I'm saying we'll be piloting within the existing budget. Okay. If there's any need for an increase in the funding, we will do so.
If we're talking about increasing in funding, there's also proposals about increasing the social welfare grant. Would you need to raise taxes in order to fund that?
That's a part of what we probably be doing, and which I've said in the budget speech. We need to look at the entire comprehensive social security, which has got 3 dimensions into it: social insurance, social assistance, active labor market policies. If you look at the current framework, a lot of social insurance funds exist in the system. You need to how to integrate them and change the benefit structure. So that exists. Even in active labor market policy, we spend about, on those programs, including training, mind you, we get about 25 billion rand per annum on just, we tax people. It's money that doesn't exist.
So then you would not need to raise taxes. You're not considering that.
Not at this stage. I'm not thinking about that.
Would you?
Mind you, the 350 or the 370 now is already built into the fiscal framework.
Okay, so why is there concern then about potentially needing to raise taxes?
There's more politics into the debate than fact. There's more politics into the debate than fact. For instance, I've seen a court application by Solidarity, which misses a number of points. For instance, they talk about a procurement which is unconstitutional.
Right.
Secondly, it talks about there's no money bill. I table a money bill every year. So why do they? So there's more politics than fact.
Do you think you can still get investors, international investors, invested into this economy?
There will be international investors investing into the economy.
Yeah.
If you look at the Intact report, South Africa still attracts more investment than any economy on the African continent.
Okay. Minister, really quick before I let you go, I've heard from advisors, they're advising you not to stay in the ministerial position, Minister of Finance. Would you consider that? Do you want to stay in this position?
Look, who's advised us?
We've had some reporting that there are advisors advising you against staying in the ministerial position.
Look, age is not on my side, okay? But if I'm asked to serve, I'll serve. Then, you know, as a minister, you don't decide your fate.
Right.
The president appoints you. If a president decides to appoint me for another term, I'll avail myself.
You will step in. All right, Minister Enoch Godongwana, thank you so much for your time. That is the Minister of Finance here in South Africa. Fran?
Jen, as always, great work. I love the fact the minister says, as a minister, you don't always choose your fate. Jennifer Zabazaja there in Cape Town, of course, covering the elections all week. Now, we're just getting some breaking news. This is official data showing that the China iPhone shipments have jumped 52% in April. That will be quite a relief, not only to Apple, but a lot of the suppliers in the region. Coming up, we're on inflation watch as the global data prints are set to offer clues into possible monetary policy. More on that next, and this is Bloomberg. Welcome back, everyone. Now, U.S. and European markets are open. We have a host of inflation data coming this week. Well, joining us now to make sense of all of this, Christian Mueller-Glissman, Goldman Sachs International Head of Asset Allocation Research. Christian, always great to speak to you, especially on a big inflation week where everyone's like on tenterhooks. First of all, what's your recent take on Fed? It's been all over the place in the last, I would say, 14 months. But also we've had quite a volatile month. When are you expecting them to cut?
Yeah, we pushed out our kind of first cut now to September, and we still have 2 cuts for the year. Okay. We were at July. The Fed speak, however, and the data, they have not really been cooperating with the dovish case for July. So I think our economists pushed it back a bit.
And in what kind of economy? This is something that we were talking when you sat down off air, is that if you cut, if they're cutting into recession, then the response of continuing to cut would be different to whether they're seeing a soft landing and just inflation coming down.
Yeah, it's very interesting. I think we see a narrative shift here from negative inflation momentum without negative growth news, which has been a great story for markets, and that's been a story up until kind of a month or 2 ago, to essentially a bit less negative inflation momentum and a bit more negative growth momentum. So you could argue that initially the kind of inflation coming down was a good thing for markets, yeah. Whereas now you're absolutely right. You're starting to see U.S. macro surprises, retail sales, consumer confidence, some of the labor market data softening. So that could definitely trigger more rate cuts. And I think our economists are convinced that if there is a problem in the economy on the growth side, the Fed could be very reactive to it. But the problem is markets might not necessarily see this as good of a story.
Yeah, I love your recent publications also looking at the risk appetite indicator. And sometimes even if you look at gold and what equities are doing, there's a mismatch, right, in how market is interpreting some of the data. Where do you see the biggest opportunities now?
Well, that is exactly right. I think if you look at the risk appetite indicator, and this aggregates 27 risk premium and pair trades across assets, so it gives you a very broad read how bullish or bearish investors are. It's shifted to the upper end of the range since the 90s. So you've seen a major relief rally, again, I think, triggered by rates more than by growth. And that sets you up for a bit of a difficult summer, if that makes sense. And if I benchmark the first principal component, which extracts growth information from that risk appetite indicator, to the recent macro surprises, there's a big gap. Actually, one of the biggest gaps we've seen in a long time. So in other words, the market and the optimism in the market currently is disregarding the fact that the growth in the US has disappointed a bit recently. Maybe because it's again expecting the Fed to turn more dovish, but we're not seeing that right now.
So a question, is a mismatch for US equities in general, or is this across the board?
So this is actually global, but I think our team in the US have highlighted that the gap is particularly large between like cyclicals versus defensives and some of the data we're getting. It's a global phenomenon, though. I think importantly, if you look at global macro surprises, they've been tailing off a bit as well, but it's really the US. I think in the US, it's been the sharpest decline in our macro surprise index.
But would you go as far as saying as this is actually a bear signal so that we'll see a correction in parts of the markets, or could this be a wider spread correction?
I would say it's certainly a bit early to call for correction. I mean, these risk appetite indicators, first of all, they're not at the absolute extremes. They still have a bit of run way. And I think the other thing is generally what we find with any sentiment and positioning indicator, they're a very good contrarian signal when they're really bearish. So when everyone is bearish, you want to be bullish. But when everyone is bullish, you don't necessarily want to be bearish. You want to see how the macro narrative, the macro picture evolves. It's gotten a bit weaker recently. But just to be clear, house view from us is still, it's a bit of a blip. And broadly, the growth remains solid. So we're not calling for a big correction, but we certainly wouldn't be surprised if there's a bit of a consolidation.
But so in terms of investment or portfolio building, do you sit on the sidelines or go to cash for parts of it until you see a couple of inflation and prints?
It's a really tricky thing right now. You make a very good question there. I think when you're late cycle, you've got to be very careful to shift to cash too early. And we are a bit late cycle, so we generally recommend people to stay invested, maybe raise a bit of cash, but I think there's a lot of focus on diversification, because if you actually see something going wrong in the economy, the bond market will probably help you a bit more. So we're neutral bonds, we're overweight equity. But I think the other thing is hedging. Because of this extreme kind of risk appetite pickup, the VIX has just made a new low since the COVID crisis. So hedges are cheap. So that helps you to get through potentially a volatile summer and all the things that you get there.
Christian, thanks so much. Christian Mueller-Glissman from Goldman Sachs International stays with us. We'll have plenty more. We'll talk about gold and maybe some of the emerging markets. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, staying with us, Christian Mueller-Glissman, Goldman Sachs International Head of Asset Allocation Research. Thank you, Christian, for staying with us. We talked a little bit about the Fed and some of the monetary policy implications for asset valuations. We also have two big elections. In the UK is coming up July 4th. How should global investors look at the UK and UK assets?
Yeah, I mean, generally, elections are usually not such important market events if you look in history. If you look at equity performance into UK elections, no matter who won, it's not such a great pattern. Maybe a slight underperformance in case of Labour coming in, maybe a slight outperformance in case of Conservatives winning. But we generally wouldn't say that, especially in the UK, where the party programs are maybe less extremely polarized opposites. It could be not such a big event. What I found interesting, though, is Europe in the last month or two has really become popular. And it's become popular because it's cheap, and we know why. That's partially sectors, that's partially structural issues. But I think certainly it's an interesting diversifier to the expensive US equity market. But I think the other thing that's interesting is you have growth options left. We discussed earlier that inflation momentum is unlikely to remain as negative, as clear of a tailwind for markets. And now the market looks for selective growth stories, maybe laggards. And this is typical late cycle. You look for laggards that either cyclically have lagged or laggards that could restructure and unlock value.
So where do you see those?
Well, I mean, the UK is interesting because you had BHP bidding for Anglo-American, and that unleashed already a lot of value. And this is a typical late cycle phenomenon when you have equity markets that are cheap, that are value, that you see restructuring, corporate activity pick up, that can unlock value. And I think the other thing is the commodity exposure. Commodities have become a bit more popular, and the UK gives you exposure to that. It's also a relatively low beta equity market. So if you look at the beta to global equities, it's low. So it could be a defensive way to get equities in the portfolio. So a lot of things for the UK.
Christian, thank you so much. Christian Mueller-Glissman there, Goldman Sachs International Head of Asset Allocation Research. Now, coming up, Ukraine's Volodymyr Zelenskiy visits several European countries in a bid to rally support for Kyiv. That story next, and this is Bloomberg. Well, tensions grow after the killing of an Egyptian soldier in a clash with Israeli troops at a Gaza border crossing. We'll bring you the latest from the Middle East. Ukrainian President Volodymyr Zelenskiy continues his European visit after securing $1.1 billion in military supplies from Spain. Meanwhile, members of the Swiss government are reportedly considering inviting Russia to a June summit, calling for a peace deal. Plus, South Africa is preparing for its national election on Wednesday, the most consequential since the end of apartheid. Well, the country's finance minister just told us his ruling ANC party is assuming it will get a majority, but the polls say the party will dip below 50%. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So Belgium says it will deliver 30 fighter jets to help Ukraine battle Russia's invasion. Both countries signing a security pact in Brussels at the start of a visit by Ukrainian leader Volodymyr Zelenskiy. Let's get more now with Bloomberg's Oliver Crook. Ollie, good morning. So President Zelensky traveling to a number of European countries. What's his goal?
Yeah, that's right. He's in Belgium now. He's going to head to Portugal later. And then he already went to Spain, where he actually got a fairly good haul, which is €1 billion worth of material that was pledged by Sanchez and the Spanish government. And that included the Patriot missiles, more ammunition for that key anti-air defense system, as well as ammunition, which, as we know, they have been starved on the front lines for some time. But also, interestingly, 19 Leopard tanks. And a number of those things, including 10 Leopard tanks, will be delivered before the end of June, which is really a sort of quick turnaround given the time that it's taken to get that hardware out to Ukraine. It is also more interesting now and more important as ever, Fran, because Hungary is blocking many of the funds that are coming from that EU fund, that 6.5 billion euros that Orban is basically stonewalling, not letting get it to Ukraine. So these bilateral agreements increasingly more important between Ukraine and European countries.
So, Scholz and Macron are holding talks today. Are they actually on the same page?
Yeah, well, listen, there's a number of things that they're going to discuss. There's some issues on defense, and really they need to start singing from the same hymn sheet, particularly ahead of the EU election. And this is really kind of what they have been trying to get out and forward, a sort of a collective message ahead of that election, saying that basically the next 5 years of Europe are going to be absolutely crucial, and they need to be defined by European autonomy, more defense spending, and really what is the formula to unlock that? Because they still want to go carbon neutral, they still want to get ahead on AI, and they need to find a formula. What they say is that you need to cut bureaucracy, and interestingly and importantly, you need to attract huge quantities of money, which brings up the capital markets union, right, Francine? This is a topic that we tend to stay away from because it puts people to sleep, but it is super important. It is something that Macron and Scholz really want to be trumpeting, saying that they need to unleash American-style capital markets, and that will not cost any money in the same way that sort of joint debt will. The problem is, Francine, it is boring, it is extremely complicated, and what you don't pay for in euros, you pay for in political will, which has been absent for the last 10 years. The question is, Francine, with all of these crises facing Europe, could they make meaningful progress on this in the coming days?
Oliver, thanks so much. Charlie Crook there, of course, on the very latest on Ukraine. Now, tensions are also ratcheting higher in the Middle East after an Egyptian soldier was killed in a clash with Israeli forces at the Rafah border crossing. Now, it follows Israel's deadly airstrike on a refugee camp, which Prime Minister Benjamin Netanyahu has described as a tragic mistake. Now, for more on this, let's go to Bloomberg's Horizons anchor, Jumana Bersace in Dubai. Jumana, we also heard a pretty explosive tweet from President Macron saying he's outraged by the Israeli strikes. The international reaction has been pretty strong. What happens next?
Yeah, that's exactly it, Francine. I think it also is worth noting that this attack on Rafah over the weekend was the deadliest since Israel launched that offensive in early May. The international condemnation came very quickly. We saw yesterday morning multiple Arab states put out commentary, including Qatar, of course, who are playing a key mediation role in the talks between Israel and Hamas, saying that the bombing will complicate the ongoing mediation efforts. Saudi Arabia also putting out a very strong statement saying they condemn in the strongest terms the continued massacres committed by the Israeli occupation forces, using the word massacres there. And then to your point, Francine, President Macron also tweeting that he was outraged by the Israeli strikes, saying these operations must stop. There are no safe areas in Rafah for Palestinian civilians. This is also echoed by commentary by the EU's Josep Borrell, who said he was horrified. And then later on in the day, we got a statement from the White House, too, everyone looking to the U.S. reaction here, saying they said that the images coming out of Rafah were heartbreaking. And then an Axios report came out overnight talking about the Biden administration looking and assessing the incident as to whether or not it crossed the red line. You will recall that a couple of weeks back, the U.S. President Joe Biden said that if Israel were deemed to have crossed a red line in these attacks on Rafah, then one potential consequence of that is that they could pause or suspend military shipments to Israel. So this is a big question mark that's hanging over these discussions now.
So, Jomana, how does this impact ceasefire talks moving forward?
Yeah, well, you know, Francine, you yourself, you spoke to the Qatari Prime Minister at the Qatar Economic Forum a couple of weeks ago, and he told you that because of Israel's ongoing offensive into Rafah, the talks are seeing a setback. Talks have been put on pause. And the messaging that we're getting from key mediators, Qatar, Egypt, is as long as this offensive continues, the future of these talks is looking pretty dire. And in addition to that, earlier on, we were talking about the flaring up of hostilities as well on the Egyptian border. An Egyptian border guard also was killed overnight. This is very rare. It doesn't happen. You don't tend to see hostilities between Egypt and Israel. They also signed a peace agreement back in 1979. So a lot of tensions in the region. And ultimately, in order to bring the two sides back together again, to continue with these discussions, you would need to see a suspension of those activities in Rafah, and that is what the mediators are working towards right now.
Jomana, thank you so much for joining us. That was Horizon's anchor, Jomana Bersace, in Dubai. Now, coming up, after nearly 2 years of falling valuations, Europe's real estate slump is on the upturn and providing exciting opportunities for property firms. More on this next, and this is Bloomberg. Well, the conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, the conflict in the Middle East has weighed heavily on shipping in the Red Sea as Houthi rebels attack vessels. But now the global goods trade is showing signs of accelerating after last year's slump. Now, that's pushing up shipping rates and giving some supply chain managers flashbacks to the demand spike that disrupted international commerce 3 years ago. So let's get more from Bloomberg's Brendan Murray, our trade czar across the world. So, Brendan, first of all, good morning. What's actually causing the spike in shipping rates?
So remember, all throughout the pandemic, the big fear was and uncertainty came from COVID. Which countries were going to have lockdowns, which ports were going to be congested. That, as the virus has faded, the risks haven't, and the risks are now largely geopolitical. As you mentioned, the attacks in the Red Sea, all of those ships, or most of them, are going around southern Africa. That takes an extra 10 days to 2 weeks. That stretches the capacity. You add on top of that strong demand for imports in the U.S., and you've got a market that's tightening and pushing shipping rates up at a pace that we haven't seen since the pandemic.
So, Brendan, how long is the squeeze actually likely to last?
Well, in the short term, it's not going to go away in the next few weeks. It likely will last for a couple of months. We're getting into the peak shipping season where importers like to restock their inventories for their peak demand in the second half of the year. So as long as that demand pressure holds up, and it's kind of feeding on itself now, if you're a supply chain manager, you're not evaluated on taking risks and going sort of the just-in-time approach. You're going to play it more conservative. You're going to order more. You're going to order more parts and buying goods than you otherwise would well in advance than you might need them.
So, I mean, does this impact inflation?
Well, there's a debate in economics about how much shipping rates actually feed into inflation. One of those geopolitical issues that we've seen in the past few weeks are tariffs. The U.S. is raising tariffs on Chinese goods. A lot of those are going to be extended. There'll be new tariffs. So, that could spur even more demand if you're concerned about your ability to get goods at a rate that you can afford them. So it's conceivable that we will see some upward inflation on the goods sector from things like higher shipping rates and tariffs. But at the very least, those inflationary pressures are not going to go away, at least in the short term.
We love a good economics debate. Brendan, thank you so much. As always, Brendan Murray there on shipping and shipping costs. Now, after almost 2 years of falling valuations, Europe's commercial property slump seems to be easing up. Now, despite a challenging first quarter in which EU deals fell to their lowest level in 13 years, exciting opportunities are emerging out of the continent's real estate crisis. Well, joining us now is Keith Breslauer, Managing Director and founder of Patron Capital Advisors. Thank you for joining us. Keith, there's a lot going on in terms of commercial real estate. This was like the big thing that nobody really wanted to touch maybe 12 months ago. It's working itself through. I don't know whether there are opportunities, but how does the scale of distressed opportunities currently stack up in the compared to the last 30 years you've been in business?
I think it's probably the third strongest. So the first, in my experience, was really in '92, particularly in Europe, when we had very high interest rates and it was a real challenge on dealing with high rates. The second one was clearly the global financial crisis, which is post-08, and that opportunity. And this is probably the third. So we have a high level of credit that's in trouble. Yep. We have this ESG dynamic, which is also an issue, yep. And that combines to create an opportunity right now.
I mean, you talk about ESG because some of the commercial real estate is not compliant with some of the norms putting in place, or does it mean that actually people don't want to sell at the kind of prices that you'd be looking to buy?
It's effectively both. So what it means is that if you believe the statistics, 80% of all commercial real estate, let's say in the UK, is non-compliant. So if you're an owner of property and you have bank debt, and on top of that you have to invest in your property to bring it up to standard, you might be in trouble. So it's both in a sense that are they prepared to sell it at a lower price to reflect the CapEx requirement to bring the standard up to bear.
Okay, so you see opportunities. How's capital raising compared to the last 30 years?
It's tricky. I would say that the American investor capital, the American investor market, which would naturally be an investor with us, has withdrawn back to the U.S. Yeah. So you have a domestic bias happening now. So we have a lot of European investors coming into European funds. We have Asian investors coming into our funds now. But our historical U.S. base in terms of new capital is scarce. It's much more existing investors who are re-upped. We have about a 76% re-up rate in our funds, as opposed to fresh new capital coming out of America.
So, Keith, I mean, again, are there any milestones that you're actually expecting this year to see the health of commercial real estate, opportunities, or actually how many losses banks will book?
Well, I think the primary issue is what's going to happen with the central banks and interest rates. So if interest rates really start coming down, you won't see as many opportunities emerging because people will try to survive to next year when they expect rates to come down even further. If rates don't come down much, then you're going to see a lot more distress hit the market. The main question mark is whether European banks will refinance a lot of the debt that is coming due. And the general sense is probably yes, but not to the same advance rate, which means mezzanine credit and equity like ourselves will play a bigger role. So we'll see.
But is there, I mean, there's talk in the market that actually end of June could be a big kind of market event potentially because, money's trying to be taken out of the funds and actually there's not enough funds that are able to repay it. Do you see, I mean, is June kind of like crunch time or could that be delayed? We've been trying to figure out, as far as I can remember, like when the critical month is.
I don't. Unfortunately, the European market is in the real estate market is not as transparent, so we're not going to have a trigger event. Fine. What you're going to have is a trigger of expectations. So if rates start to come down, the concept of survive to 25, which is this great expression, will probably continue to be the case. If rates don't come down, it'll be a whole different discussion. And I think the central banks are very much aware of that in terms of potential exposure. But the reality is the majority of real estate needs significant investment to bring the carbon emissions down and the ratings up.
But are we going to start seeing also banks sell off some of the non-performing loans in the space? And what does that basically bring up as opportunities?
Definitely. I mean, the banks are doing that right now. They're doing it generally through the direct sale of assets. But the banks the degree of leverage, not as much. We don't have NAMA. We don't have SARAB, which is a Spanish bad bank. We don't have the Royal Bank of Scotland or the HBOS losses that we've had in the past. So there is a degree of credit distress, which is definitely coming. It's a smaller scale, which is why I rank it number 3 as opposed to top 2 or 1 or 2. So it's going to happen. The reality is debt is coming due. People don't have the money to do the refinancing. They don't have the money to invest in the properties. So in theory, that's where the opportunity set is.
So where are you looking for opportunities? Is it the UK compared to other? Is it by region? Is it by kind of asset?
So I would say the UK and Germany remains the largest markets in terms of both investment and in terms of capital markets, in terms of credit. Therefore, those are our big markets. Spain and Portugal remains an incredible opportunity in terms of growth. So we focus very much on that, followed probably by Benelux and maybe Ireland. So I would say the UK and Germany remains very important markets to us, and we continue to be very active here.
Yeah, is there anywhere, are you looking for London or actually elsewhere? Is it the suburbs? Because I know you've also raised the 680 million euros. What kind of returns are those investors looking for?
Yeah, so we've actually raised 860 million, the other way around, but 860 million euros of equity. And those returns are high. I mean, people are looking for mid-teens returns because you are investing in an illiquid asset class. Yeah. You need to fix the asset, and you have 4 years to do it. So your returns have to be high enough to compensate versus other alternatives. We generally don't look in London as a general rule because London is a tricky market. It's an international market. It's not we're much more of a mid-market player. So we used to own Cala Homes, which is a very large house builder many years ago. We tend to do stuff that's outside across the country where you have a much larger demand, a much larger base.
But Keith, we're also looking at elections in the UK, you know, July 4th. Does that change your perspective on some of the policies where, you know, some of these policies are just working their way through as we're getting into election mode?
Sure. I mean, I think if they change stamp duty, it'll have a massive impact on residential house prices, as it did before. So one thing will happen, either transactions will shrink, and there'll be no price effect, or transactions will be significant and prices will adjust. So a big question mark is what will be tax policy on housing? What will be, how are they going to deal with planning? Are they going to relax planning? Are there more houses going to come onto the market? So these are, you know, major questions, and it's very difficult to navigate, frankly, both parties' views on exactly what will happen in terms of housing, and that's a big part of our economy here.
Why? Because we haven't seen the details yet, or do you feel like, you know, a policy hasn't been made, or it's just been made but hasn't been told the electorate yet? All
the above. And then combine that with the fact that local councils have so much power. So the federal, you know, on a nationwide basis, you could have a view, but in terms of implementation on a local level, it gets more challenging. So there's a real question mark on what's going to happen, and it's a very serious issue. There is a real problem with not enough supply of housing relative to demand, and that's hurting people. And I think that's going to ultimately impact the voters and how they think about the markets.
Keith, in Germany, where do you see distressed and undervalued assets?
Well, there's two. The famous, of course, is German office, right? So German office buildings, a lot of it. Yeah. A lot of it is not compliant, and a lot of it has a lot of leverage. So there's a question mark on how that unwinds. Yeah. It's not obvious to us how that will hit the market, how cheap it will be, what will be the exit. German residential remains very, very interesting because it had a lot of leverage attached to it. And because of that leverage and that squeeze that happened from an increase of interest rates, we're now seeing opportunity there. So to us, distress would be office and resi, and then growth would be more industrial.
Okay, Keith, thank you so much for joining us today. That was the Patron Capital Advisors, Keith Breslauer, of course, joining us on everything in terms of distressed assets and undervalued assets in Europe. Coming up, the UK's Labour Party wins the support of business leaders looking for a new outlook ahead of summer elections. More on that next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, Labour has won the endorsement of a coalition of business leaders who have said that a new outlook is needed so the UK can break free from a decade of economic stagnation. Let's get more on this with Bloomberg's Adam Blanford. Adam, I mean, this feels significant. Are there enough policies for businesses and chief executives to get behind Labour?
We are still waiting to see the details from Labour of what their business policies are. Shadow Chancellor Rachel Reeves is going to make a speech this morning, and that's obviously come in tied in with this letter. I think it's 120 business leaders, some CEOs, some former CEOs, all talking about their backing for Labour and its approach. Reeves is trying to tread a path that appeals both, I think, as they put it, to workers, Labour obviously being the traditional party of the workers, and business, which the Conservatives have often claimed as their comfortable ground. They've been the party of business. But Labour's trying to tread that fine line, a little bit like the leader Keir Starmer said yesterday in one of his speeches, that they're trying to get to appeal to country before party. They're just trying to broaden their appeal.
And the Tories, Adam, because they're so far behind in the polls, so what's their strategy?
Well, they've come out in recent days with a couple of eye-catching policies. Over the weekend, the headlines here were dominated by a policy of introducing national service for young people. And then today, the Conservatives' new policy pledge for the election is to reduce the tax burden on pensioners, older people who could see up to, at the beginning, £100 off their reduction to their tax liability for their pensions, at a cost of something like £2.5 billion a year.
How do they fund that?
Well, the explanation for today, we need to see a little bit more of the accounting, is that this will be funded by a crackdown on tax evasion. But all of these things come with caveats. How do you set up the systems to actually run the tax evasion? What are the costs on that? And similarly, that national service programme flagged over the weekend came, I think, with a £2.4 billion cost. So there's definitely questions here. And the Conservatives, interestingly, have put down spending pledges early in the campaign, which Labour hasn't done yet. So we're still waiting to see what Labour will be adding to the bill.
And Adam, on the economics, I mean, we have a great story basically showing that the next UK government just faces the hardest fiscal challenge in 70 years. So it's tough finding the money right now.
The challenge is that they, in some ways, have to find the money. Yeah. Right? Living standards have declined for the first time during this Parliament, I think it is, for the first time in many, many decades. So public services do appear to need a great deal of investment. Many things, people who use the National Health Service are finding that the services are very, very strained. There's difficulties around social care. There's difficulties in public services all over the country, and yet the current Chancellor, Jeremy Hunt, has very little fiscal headroom. The Conservatives are either going to be re-elected if they can turn around a big poll deficit, or bequeath a situation to Labour where they will have to work extremely hard and quite creatively to reboot the economy.
Adam, thank you so much for the terrific briefing. We'll have plenty more, of course, on this throughout the day and onto that July 4th election. Bloomberg's Adam Blenford. Now, Belgium says it will deliver 30 fighter jets to help Ukraine battle Russia's invasion. Both countries signing a security pact in Brussels at the start of a visit by Ukrainian leader Volodymyr Zelenskiy. You're looking at live pictures with the Belgian Prime Minister, Mr. De Croo, there with the Ukrainian President Volodymyr Zelenskiy, who's on a whistle-stop, actually, tour in Europe to try and get support, and also, I think, to tell leaders that war in Ukraine is still going on, not to be forgotten. Up next, Bloomberg Brief, Manus Krani in New York, and this is Bloomberg.